In this video, I want to talk to you a little bit about the Fibonacci effect. And I'm going to take you through, and this is today's market, and we're going to go through and I'm going to show you how this works. Now, I sent you a PDF on this the other day. I'm going to attach it to this email. I'm going to send it to you again because I want to show you through video how this works. So we're going to go through and look at the Fibonacci effect. Now, this is the S&P 500, as you can see, on a 1-minute time frame. I do have Fibonacci turned on, so the bars are a little bit cleaner. And we're going to go through and look at how Fibonacci and the bulls and bears work one with the other. All right. So the big key here is the neutral zone. It's the yellow bars. Now, a lot of times people are looking at the highs and the lows, and they're taking those as their key points. The highs and lows are important, and yes, we're going to use those. But the key point is the neutral zone. It's the yellow zone. That's the most important point of Fibonacci. It's not the highs and lows of the market. It's the neutral zone. So we need to look at the neutral zone. We need to trade off of the neutral zone, all right? And the Fibonacci ruler gives us our projections and our retracements. It gives us our points of profit taking or our goal of where we think the market's going to go. So I'm going to show you how this worked today in today's market. We're just going to take the Fibonacci ruler and we're going to lay it over the top of the bulls and bears because the bulls and bears is a mathematically calculated Fibonacci projection, all right? It calculates for us the Fibonacci sweet spot, the distance between 38.2 and 61.8. That's why the price bars turn yellow. All right, so if I draw the Fibonacci ruler on here, from this high peak right up in here, down across to this bottom point, you can see that the Fibonacci sweet spot is right here, okay? Fibonacci sweet spot, 61.8 to 38.2. But you'll notice that on this downtrend from here to here, from this high to this low, the yellow zone did not go through the Fibonacci sweet spot. They didn't match up. So you're like, well, I don't understand. Why didn't it work? Well, it did work. What we're doing is we're using the projections off of the sweet spot, not off of the highs and lows. Now remember, we're not looking at the highs and lows here. We're looking at the sweet spot. So we have to line up the Fibonacci ruler with the mathematical location of the sweet spot, of the yellow zone. Now I'm going to come in here and show you. I have my preferences, and these are the preferences for the bulls and bears. So the bulls and bears preferences are set to a sensitivity of 72. I'm using style price bars. Formula is progressive. And then we just have red, neutral, and bullish. Red is for bearish, of course. Neutral is the Fibonacci sweet spot. And then green is bullish. Now, I'm not using the bulls and bears blue light in this example. We do generally, or I do generally, have these turned on. But for this example, I just want to clean up the chart and just show you the red, yellow, and green. And now as we come through, I'm not having the arrows displayed. I don't want to have any of the filters turned on, nothing. Just straight up Fibonacci. All we're looking at is Fibonacci neutral zone moving into a bullish market, which turns the price bars green. Fibonacci neutral zone, which is yellow, turning into red bars, which is bearish. So now I'm going to come through and I'm going to show you how this works. We're not going to go off the highs and lows. Now, again, we're going to use the highs and lows, but those are not the key points. The key point that we really want to pay attention to is that neutral zone. So this is the opening bell. And you can see the market started to come down here at 7:30. It dropped right out of the bottom of this thing. And we'll draw a vertical line in here right at 7:30. Now, that's, of course, 7:30 is my time here in Utah where I'm at. And so you can see that if we come in here, we'll put that in there just like that. And you can see that was the opening bell. That was the morning time. So just prior to the opening bell, the market started to fall out of bed. It came down. It created this new low at 42.68. And then it started to rally. Now, this is the point you need to watch for, all right? We're going to take the Fibonacci ruler. And at this point, now remember, we don't know that the market's going to rally. We don't know that it's going to take off and go up like this. But with Fibonacci, we can make that projection and we can trade off of it. So I'm going to come in here and I'm going to delete that arrow. And we're going to draw the Fibonacci ruler in here. Now, the way we do this is we come in and we find the low point, all right? So the low point at this point, we're going to come in here and we're going to draw our Fibonacci ruler up. Now, at this point, remember, we don't have the upper bars. All we have are the yellow bars. So we're going to draw the Fibonacci ruler through the yellow bars. So the yellow bars match up with our Fibonacci sweet spot, okay? So this is the yellow bars. We draw the ruler to match up with the sweet spot. And the projection of where prices are going to go becomes this blue line right here. All right, now this one went way beyond the blue line, but that's our target. That's our initial target. We're going to enter on this market as it starts to rally and go up into the green bars, and our target is going to be the B line right here. That's where we're going to put our first limit to take some profits. Now, if you go in with multiple contracts, you can anticipate higher prices, but generally that's just our trade. It's a quick scalp or a quick day trade off of this thing. And what we're going to do, and if we're in this one, we're in the micro mini account. So if we go up from here to here, that's $23. So it's not killing you if you're trading this for the first time and you're just giving it a shot. You're doing it in the micro minis. One contract is $22. If you're doing it in the regular size contract, that would have been a nice trade of $225. So you can, once you get comfortable with this contract or with this concept, you can increase your size and go up to the larger contract. But let's just stick with the micro minis for now. For those of you who are just getting used to this and want to give it a shot, this is how you do it. All right. Now what we do is we just wait. We just wait. And it's really easy to know what to wait for. We don't wait for a new high because we don't know when those occur. We don't wait for a new low because we don't know when those occur. We wait for a neutral zone. We wait for the next yellow. Okay, so we just wait for the next yellow bar. So let's clean this up. We're going to come in here and look right here. We get new yellow bars. So right here, this becomes our new yellow bars. It's the neutral zone. It's the neutral zone of what? The Fibonacci ruler. So now we need to go from the lows to the highs and anticipate that the market's going to move to the next level. So we're going to come in here. We're going to grab our Fibonacci ruler. We're going to come in, and again, from this low right here, we're going to draw our Fibonacci ruler up. We have no idea where it's going to go. All we know is we have a neutral zone. We're going to line up with the Fibonacci neutral zone on the ruler. So we have the mathematically calculated bulls and bears neutral zone. We're going to line that up with the Fibonacci neutral zone of 38.2, 1561.8. This one turned green, which was what we would anticipate for a little A, B, C pattern. We'll just sneak in here another tool real quick. A, B, C, and we're going to anticipate this market's going to rise in price. All right. So we're going to look for the market to change from yellow to green. Now, if it doesn't change from yellow to green, we can either take a short position and anticipate as it falls out the bottom of this thing, it's going to retrace back down to A. We can do that. It's a less probable trading scenario, but it's something we can do as it breaks out of the neutral zone and retraces back down to A. We can do that and take that short position, but we would rather see it continue the trend. So we have the first leg A, B, and we're looking for that C, and we're coming out of that neutral zone or the yellow bars. And here we go once again with this market breaking to the upside and moves up just to, now again, remember our target price for taking profits is going to be this B point right here, the projection of the B point. So again, that's another $23 in the micro mini account with a single contract. If we were in the regular size contract, that would be $237. So that's a nice trade per contract. Now remember, one contract in the micro mini is a $100 investment when you're day trading. And one contract in the regular size, which would have been the $237, is a $500 investment. And there's no pattern day trading rules, so you don't have to have a minimum of $25,000 in your account. You can do this with $3,000, $4,000, $1,000, a relatively small sized account. So as we're coming in here, we're going to do this one more time. All right, let's come in. We're going to go ahead and we're going to delete this out of here. And now we've made that trade. We got out when the market hit the target zone. And we're going to wait for the next yellow zone, okay? Again, we're not looking for a high. We're not looking for a low. We're looking for the next yellow zone. So the next yellow zone comes along, and lo and behold, there it is. We find the yellow zone, and we're real happy. We're sitting here looking at this market, and we see this peak up here. We're going to continue the trend. So we're going to come in. We're going to draw our Fibonacci ruler. Again, we're not going to draw it down any farther than where the Fibonacci sweet spot is. So we're going to come in here, and again, here's the sweet spot. We're going to draw the Fibonacci ruler over the top of, so the Fibonacci 38, 50, 61.8 is over the top of the sweet spot. And our target for taking profits is right here at the B point. All right, so once again, the market falls out the bottom of this thing, and our target for this price is right there. It's a $20 move or a $15 move in the micro minis, $150 in the regular size account. That's our trade. Now, yes, this one went much further. It went out into the Fibonacci, what we call the extensions or the projections. All right, so this first one is the projection. We're going to project to B from A out of the neutral zone, but this one went out into the extensions. If you want to continue to hold the position, trade for a longer trade and go out longer, if you trade multiple contracts, maybe you could take one off at the B point here on the short position, let the other one run a little bit farther. These are all strategies that you can do, but this is the basic entry strategy and the initial projection of where we anticipate the market going, the high probability projection point. All right, that's it. We took our $15 or our $150, depending on which market you're in, And we're going to go ahead and we're going to do this one more time. Now, here's another yellow. We don't have to sit and look for highs and lows. We don't have to look for breakout points. All we have to do is we have to look for the Fibonacci neutral zone. We then take our Fibonacci ruler. We drag it over the top of the bars. We're going to go from this low point. We're going to go all the way up until our bars cross over. Right up in here, you can see we got the yellow bars going through the Fibonacci neutral zone. Now, this one, the market broke out the top and didn't quite hit. Didn't go all the way up, did it? Didn't go all the way up and quite hit our B projection point. Pretty darn close, but not quite there. Now, if we make a few adjustments, I mean, you can always go back and say in hindsight, well, I would have adjusted this a little lower right in here with this point right here. You can see this little point right there. If we'd have gone in and broke it above those that little flat top is where our top of our 38.2, as it broke out those yellow bars, you could say, well, it did hit it, okay? But it's there, that's the point. It went up there, it came up to that B point. Now, what I do when I put my Fibonacci projections out there, I put my limit order to take profit. I don't put it right on the B point. I put it just inside of it. It's that little trick that I've touched in the past where if you want an order to be filled, you put it on the inside of resistance. If you don't want it to be filled, you put it on the outside of resistance. So that B line is our target. We're going to always put our limit order just on the inside of that B point. So it doesn't have to go up and hit the B point to give us our profit. It's our target price, but it just has to go up and get close to it, test it, and it's going to hit our limit order and take our profits. So that one right there went through the nice little Fibonacci sequence once again. Let's do it one more time. We're going to come in here, and as the market continues to move, this is the active current market, and so we're going to come in here and we're going to do the same thing right here. We wait for the yellow bars, all right? So we wait for the yellow bars. There's our yellow bars. We're going to come in with our Fibonacci ruler once again, and we're going to drag that over the top, and we're going to go from the top here, and again, we're going to drag the ruler over the top of the yellow bars. So the bottom of the yellow bars, the top of the yellow bars, right there, you can see that I put this right where the yellow bars broke right there, and I've got the top right here where the yellow bars at the high. So now we've straddled the yellow bars in here. The market's been going red. We're going to anticipate a continuation of the red trend, and we're going to look for it to come down to our Fibonacci projection or our target price, which is going to be the B point right in here. And again, we're going to put it just a tiny bit inside of that. And there we go. If we come in with our dollar calculator, once again, we're going to see that when it broke out the bottom of this thing and it hit our target, that's a $25 move. All right. Again, $25 in the micro mini, $250 in the regular size account. It's worked every single time so far. Does that mean it's going to work every single time for you in the future? No, of course not. Nothing works every single time, but we're using high probability trading patterns, and it's easy for you to find and identify. The biggest problem traders have is knowing when to get into a market, when to get out of a market. This is a cold, hard, solid strategy, all right? We just play the yellow bars. So now we're going to come in with our Fibonacci ruler. We're going to do it one more time. Look at this one here. This is one yellow bar. It went really far, really fast. It gave us one yellow bar, but hey, why not? Let's trade it. Let's come in here, grab our Fibonacci ruler. We're going to come across and we're going to draw our Fibonacci ruler right across that. There we go. And you can see in here, it's a small trade, one bar. We straddle that bar with the 61.8, 38.2. Our target becomes the B point right here. And of course, this one went way beyond the B point, but nonetheless, if we draw from the breakout of the ruler, that was a $12.50 move on the micro mini or a $125 move on the regular size account. We're just snatching out that little piece between the Fibonacci breakout and the Fibonacci projection, all right, the Fibonacci ruler. So that's what we're looking for. And here we are looking for more yellows in here. If we can come in here one more time, we're going to lay this in here. We got yellow bars coming across. Our target point is going to be in this projection. We're going to look for this little ABC once again. Let's sneak in this little ABC tool. We're going to come in here, and this is our high point right in here. We're going to anticipate this market coming down and testing this B point down in here. This would be our target price for this next setup. So this is where we're going to look for the market to come to. And if it comes down and touches our setup where it's breaking out right here, we'll look for the breakout. That would be another $25 move. If this market follows through and continues with this downtrend off these yellow bars, we'll look for it to continue lower. It's bouncing back up into the yellow zone right now, so we're still waiting neutral, waiting for this market to start to fall, which is the point we can get in. Now, if you get in and that doesn't fall, which maybe this one won't, our stop would be the high of the Fibonacci sweet spot, right? So if we get in on the break below the Fibonacci sweet spot, or generally a break from yellow to red, that would be a trigger point. We could get in on a break from yellow to red, that would be a trigger point for the downside. Or if we wanted to wait for it to break below the Fibonacci sweet spot and get in at that point, we could do that. Either one. I've been doing the calculation off the bottom of the sweet spot or the top of the sweet spot for the projection, and then you can take that position. And if you get stopped out, you get stopped out with the distance of the sweet spot. So the distance between 38.2 and 61 point out, that's going to be your basic stop zone, all right? Because if it breaks lower and then it turns and starts to rally, that's where we would have taken the long position for the retracement trade. All right, so that's trading the Fibonacci ruler, and that's trading the bulls and bears and the Fibonacci sweet spot. That's what I call the decision point or the Fibonacci effect.